Good evening, it's Quant Trade Edge, and today I wanted to show you how understanding market structure and Gann bar counting can help you predict some pretty big moves in the S&P. So here is a text chain, and this is all Central Time. I was speaking to a friend. I'll give him his privacy here by blocking out his name. But at 8:50 a.m., I made the call, and at the time it felt crazy that I think we go outside up, greater than 44.14. And, some of my reasoning was breadth is positive. This was supposed to mean knife catch zone, which is a support level, 43.66 to 43.75. The Russell was up. And, crossed out a word here, but basically this goes to show that when you're, you have to analytically do your analysis and figure out what's going to happen and recognize that at the same time, it's going to feel like crap. It's not going to feel like what you're saying is going to happen, but you need to do it anyway. And here, like I said, I'm probably going to get, messed up on this trade. And then I just pointed out a couple of relative strength leaders. Palantir and Coin were up even when the market was down. So this is the 5-minute chart. And at 8:50 a.m., we were right here. We were at 43.71.75. And, we essentially bottomed on the very next bar and then made an outside day all the way to 44.23 and a quarter. So why did I think this was going to happen? So I listed a couple of the reasons, on that text with the breadth and whatnot. But the real reason I called for an outside day was on the daily pit session Gann bar count. If you look at from this top, we had, I'll draw them in. We had a leg down. This here counts as a leg up, leg down. We had a leg up, leg down, leg up. Now here we had one wave out of sequence where this was a one waver down, but then we had a two waver up, and then a two waver down. And what I'm just trying to show you is that things tend to move in these two-wave patterns with the occasional exception. And what I have been tracking here is, our first leg up, our leg down, and as of yesterday, we had started this leg up. And you would typically want this leg up to exceed this previous high. This previous high was 44.19. And at the time this morning, we hadn't done this yet. So to me, this wave up was not done. Yet we had already pierced below previous day low. This low was 43.77 and 3/4. When we were talking about this, it was 43.71 and 3/4. So the only way to convert this then from what at the time looked like a down bar, in which case this wave count would be off, would be to have an outside bar, because an outside bar takes the same label as the previous bar. And I would refer you back to the video, the detailed video I did on Gann bar counting, and I'll try to link it here. But basically, to get a up bar, you need both a higher low and a higher high, and that makes an up bar. To get a down bar, you need both a lower high, right? That's a lower high to the previous bar, a lower high, a lower low, and that gives you a down bar. An inside bar takes the same label as the bar to the left, so you can see how this was an inside bar and this was an inside bar. And an outside bar takes the same label as the bar to the left, so the bar to the left was an up bar. This morning, when this looked like a down bar, and that does not make sense in this wave structure because we need the second wave to exceed the first wave, that's when I started thinking we need to have, along with the other concurrent indicators, that we need an outside day to then change this to an up bar. So just wanted to show you how the importance of market structure and that Gann bar counting can help you. And again, looking at the 5-minute chart, that call was made right there, 8:50, so probably after this bar started, and that was very close to the bottom. That basically had a 2.5-hour rally of from that level, 70 to 50-point rally in the S&Ps. Anyway, ask me questions. I'm happy to answer them. Thank you.